This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Let's make a deal. 3 multi-billion-dollar mergers announced in 3 different industries today. Why the rush to walk down the corporate aisle now?
Big Oil's big week. ExxonMobil, Chevron, BP all report earnings. Will their results energize the stocks?
And buyer beware. You signed up for a free trial. Now you're being hit with unexpected fees. It's legal, and the cost is eye-popping. All that and more tonight on Nightly Business Report for Monday, July 29th.
Good evening, everyone. Big dollars pouring into big deals today with 3 multi-billion-dollar mergers. 2 of the world's largest advertising agencies agreed to merge. France's Publicis and U.S.-based Omnicom will create a new ad behemoth with $23 billion in combined revenue last year, and the scale and power to better compete for digital ad space. Also today, a big deal in the luxury retail space. Canada's largest department store chain, Hudson's Bay Company, which already owns Lord & Taylor, is paying about $2.5 billion in cash for Saks Fifth Avenue. The company will now have 320 stores in some of the biggest cities in North America. And a mega pharmaceutical merger. U.S.-based Perrigo, which makes over-the-counter medicines, is paying more than $8.5 billion for Irish drug company Elan Corp, opening the way for it to move to Ireland for a much lower tax rate and to expand internationally.
And one more smaller deal to tell you about, this one involving local TV stations. Sinclair Broadcasting Group is buying 8 ABC affiliate stations, along with a 24-hour cable news channel in Washington, D.C., for just under $1 billion. The current owner, All Britain, is also the publisher of Politico, the political website. The deal comes on the heels of similar recent local station acquisitions, like Tribune Company's purchase of Local TV and Gannett's buyout of Belo Corp.
So why is all this corporate buying going on now? Joining us to answer that, Richard Peterson. He's the Director of Valuations and Risk Strategies at S&P Capital IQ. So, Richard, it is pretty amazing to have all of these deals clustered together. Why now?
Well, Susie, I think what we're seeing actually is just a continuation of what has been transpiring over the past several years. If you look back in 2012, we had over $900 billion in announced transactions. So far this year, over $550 billion. In fact, some of these deals were actually in play earlier. For example, the Elon deal announced today, earlier this year, a company called Royalty Pharma made an unsolicited bid for that Irish company, and they rejected that offer and went about seeking, putting itself into play. In terms of Saks Fifth Avenue, again, it's a continuation of we're seeing strong activity in the consumer sector. This is actually a treasurer, marquee name that investors are gravitating to.
Let's talk. Some of these deals seem rather random as far as industries go. You have one today in advertising, and you have them in drugs, and you have them in television and retail and so forth. Is there any particular sector of the economy where you expect the activity to really get hot? And specifically talk about the advertising business. That one, Omnicom and the Publicis Group, is a huge deal. And with the potential to spark new ones, right? Well,
in terms of sectors, what we're seeing is really the same cast of characters, meaning it's financial, it's healthcare, it's technology. In regard to the advertising transaction today, it's really a response to Facebook. Facebook, beat earnings expectations last week. These companies now are looking to, rather than promoting ideas or concepts, trying to create big data and trying somehow to put out information that can grab different markets. And I think we're going to see more of that type of deal in the sense that competing with the Facebooks of the world and the Googles of the world, for that matter. But I think if you look at deals forthcoming, where you see potential activity in the cable TV sector, again in big pharma, looking in response to healthcare regulation, and also I think also in technology, given the fact that that sector has over upwards to like $200 billion or more of cash on the balance sheet available to make acquisitions.
You mentioned possibilities of other deals, and we do have a graphic of some of the names. You went out on a limb to give us some names so investors can take advantage of this trend. Let's pull that up on the screen. And how Is there an urgency to get this stuff done sometime this year?
That's a good question. I think on one hand, management has to be cognizant of its shareholders and responding to the board. I think interest rates may come into play somewhat. We've seen the 10-year the yield on a 10-year go up from 1.7 to 2.7. Some potential buyers may be skittish that their borrowing costs may go higher and maybe accelerating a deal now rather than later. But I think in general, what's going to drive deals is that they want to try to provide value to shareholders. Sometimes these deals come about not as opportunity, but as necessity. The fact that they need to expand their footprint, they need to deal with competitive measures, or they want to seek new markets. That, for example, if you go back several years, where when Kraft Food acquired Cadbury, that gave into the entrance into many foreign markets that Kraft wasn't entering into.
Some of these deals are for cash. Why?
Well, first of all, the cash is available. One thing, too, cash is cheap. Even the fact that rates have gone up a little bit over the past several weeks, companies still can tap the credit markets, can tap bank loans. And again, I go back to the fact that if you look at non-financial companies in the S&P 500, they have about $1.8 trillion available, dominated by industrials, healthcare, and technology. And we saw the industrials last year when Eaton acquired a company called Cooper PLC, an Irish industrial firm.
All right, Richard, thank you so much. Really appreciate you coming on the program.
My pleasure. Thank you.
Richard Peterson of S&P Capital IQ.
Well, stocks edged a bit lower today on Wall Street, despite all those big-name mergers we were just talking about. Investors appeared to be a bit cautious ahead of this week's two-day policy meeting by the Federal Reserve and Friday's employment report for the month of July. Also adding to the jitters, pending home sales for June, which turned slightly lower, coming off a 6-year high in May. Some analysts worry that rising mortgage rates may have kept some would-be homebuyers on the sidelines. At the end of the session, the Dow finished 36 points lower. The Nasdaq was off by 14, and the S&P lost 6.
Time Warner Cable and CBS have waged a bitter standoff centering on how much the cable giant pays CBS to retransmit signals in 3 major TV markets. Talks are ongoing with a new deadline set for 8 p.m. Eastern Time tonight. Will the two reach a deal, or will CBS TV stations go dark for millions of Time Warner subscribers? Julia Borston joins us now with the latest and why this has become such a big battle. Julia, it's really coming down the wire, isn't it?
It really is, but I have to say the fact that Time Warner Cable and CBS decided to extend their deadline by 3 hours until 8 p.m. Eastern tonight, foregoing a potential blackout that could have happened at 5 p.m. Eastern, does seem like a good sign, like they're getting closer to a deal. But CBS has made it clear that it's willing to pull the plug on its channels if it can't get the kind of price increases that it wants. Now, this battle between media giants is contentious because the core of the broadcast model is at stake.
3 million Time Warner Cable subscribers in Los Angeles, New York, and Dallas have been worried about losing access to CBS and Showtime, hit shows like Under the Dome and Ray Donovan. The battle, being waged in television commercials and internet ad campaigns, is over the retransmission fees Time Warner Cable pays CBS. CBS says it isn't being paid enough for its top-rated programming. Time Warner Cable says the price hike is unreasonable. The question is just how much more Time Warner Cable's willing to pay.
So what do subscribers think about the risk of a blackout? They're not happy, and they're willing to go elsewhere to find the content they want to watch if they can't find it on television. Here's what a slew of TV fans in both New York and Los Angeles had to say.
If they're holding, quote unquote, holding people hostage, that's not a good business practice, I don't think.
I don't know, I just go to Netflix, I guess.
I mean, that's definitely a different avenue to go, is use all the different Netflix, Hulu, go online and find sports.
I was under the impression that free TV was free.
They just want their shows. There has to be a compromise somewhere.
Don't get rid of Channel 2.
I'm not over 50, so I don't really have cable. I just search for things on the internet.
And that's the big worry, with young people already questioning the value of cable. The question is if a blackout of CBS for Time Warner Cable customers would drive them to cut the cord and simply find content elsewhere. Susie?
Well, what do you think the chances are that CBS and Time Warner will come to a deal by the deadline?
You know, Susie, I think the chances are actually pretty high right now. If you asked me before 5 p.m., I would have said there would have been a good chance of a blackout. But the fact that they came to an agreement to extend their negotiations for another 3 hours makes it seem like they think they could probably resolve it in another 3 hours.
You know, Julia, I'm over 50 and I still have cable. There have been lots of examples of cases like this involving ABC, Disney properties. I believe Fox had one with another cable provider. What is the most of the time these things get resolved, don't they?
Well, they always get resolved eventually, and there's always some sort of compromise. The cable or the satellite TV provider always pays some sort of increase. The question is just how big of an increase, but sometimes they do take a while to get resolved. Now, last year around this time, DirecTV was locked in a battle with Viacom, and there were about 20 million DirecTV customers who didn't have access to Viacom channels like MTV and Nickelodeon, and that went on for 9 days, but it did eventually get resolved. This one I don't think will last that long.
All right, Julia Borston, thank you very much. Julia reporting from Los Angeles. Well, the raging battle over the future of the computer maker Dell is also making news tonight. Michael Dell, the company's founder, says that even if shareholders reject his $24 billion offer to take the company private, he'll stay on at the company. Meantime, activist investor Carl Icahn, whose competing offer to shareholders would keep some of Dell publicly traded, warned that the latest buyout offer from Michael Dell skips over an important shareholder safeguard by making them vote and preventing them from passively dissenting on the offer.
Amazon.com has scooped President Obama just a day before the president visits an Amazon.com warehouse in Chattanooga, Tennessee, to talk about jobs for the middle class. Amazon said today it plans to hire 7,000 workers in 13 states. About 5,000 of those jobs will be at Amazon distribution centers. That's where orders are packed and shipped. And the rest will be at customer service positions.
Apple is in the crosshairs again. A labor rights group is accusing Apple, an Apple supplier, of abusing some of its workers in China. The organization called China Labor Watch says that Peglatron, a Chinese company that makes iPhones for Apple, withholds employees' pay, forces them to work excessive hours, and discriminates in its hiring practices.
Well, the price of gasoline has spiked higher again. Prices are up 8 cents a gallon nationwide over the past 2 weeks. The latest survey from Lundberg shows that a gallon of regular unleaded will now cost you $3.67 on average. Chicago is the most expensive city to fill up. The average price there, $4.10. Charleston, South Carolina, has the nation's lowest at $3.34.
Crude prices are up, gasoline prices are up, as Susie just mentioned, and this coming week we get the latest earnings from some of the world's biggest energy companies. Jackie DeAngelis has a look at what's ahead.
The S&P 500 energy large cap sector has seen roughly a 15% gain year to date. But it's a middle-of-the-road performance when compared to the other sectors. So will earnings give energy companies a jolt?
Energy companies have come under pressure this year as falling Brent prices have impacted their earnings as well as falling production volumes.
BP is the first to report on Tuesday. The company beat expectations last quarter, helped by 2 new oil fields and strong trading profits. But analysts typically strip out the special items and look for adjusted profit to be ahead of consensus. BP is still fighting lawsuits over the Deepwater Horizon disaster more than 3 years ago, recently seeking to halt spill claim payments as possible misconduct is investigated. A federal judge denied that request.
I think BP's earnings are going to be weighed down by claims resulting from the Macondo well spill from a number of years ago. In addition, BP is finishing up its multi-billion-dollar modernization project at its Whiting refinery, so it's not going to see any accrued earnings from that project really until the end of 2013.
On Thursday, we hear from ExxonMobil. Analysts are expecting revenues to be down from the prior year on a percentage basis in the teens, but they are looking for an EPS beat. Of course, that will depend on how margins are trending and how Exxon is managing its costs.
I expect that Exxon is going to beat its expectations. The refining sector is going to weigh down Exxon's results, but on the other hand, natural gas prices are 15% higher in the second quarter compared to the first quarter, and that's going to help boost their earnings.
Finally, on Friday, we hear from Chevron. Wall Street is expecting both revenue and earnings to show a drop from the same quarter last year when the company reported a big earnings beat. If CVX surprises like that again, you could see this stock pop. For Nightly Business Report, I'm Jackie DeAngelis.
Still ahead, now you see it, now you don't. Online messages that self-destruct. It's been popular on college campuses for a while, and now it may be finding a new fan base on Wall Street. We'll tell you why. But first, take a look at how the international markets closed today. Some good news from Washington. The U.S. government now expects to borrow $209 billion in the current quarter. That's $14 billion less than previous forecasts. And the Treasury expects to have a cash balance of $95 billion on hand when the fiscal period concludes at the end of September. Now, the reason for that higher balance, payments to Uncle Sam from the bailed-out mortgage giants Fannie Mae and Freddie Mac.
The chairman of the Federal Reserve might have to give a deposition in a lawsuit over the bailout of insurance giant AIG. A federal judge ruled that Ben Bernanke can be questioned in a lawsuit filed by the former CEO of American International Group. Maurice Hank Greenberg is suing the federal government over the $182 billion bailout of the firm, saying the terms of the deal were too costly, and he's seeking at least $25 billion back. The judge approved the questioning of a sitting Fed chairman in a civil lawsuit, saying Bernanke has firsthand knowledge of the government's decision to bail out AIG at the height of the financial crisis.
Two Dow components at the top of market focus tonight. First, Pfizer announcing a new focus on innovation and exclusivity in certain drug lines a day ahead of its earnings report. Pfizer shares traded at 1.5 times normal volume. They gained 0.5% to close at $29.54. And Caterpillar, after a poor earnings report last week, said today it will buy back $1 billion of its common stock from the French bank Société Générale. CEO Doug Oberhelman said CAT is taking advantage of a strong cash position to deliver for shareholders. Investors bid the stock up more than 1% today, and Caterpillar closed at $83.02.
CF Industries soared today after activist investor Daniel Loeb told his investors he's taken a stake in the fertilizer company. Loeb says the management should deliver a much larger dividend to his hedge fund, Third Point, and other shareholders. Shares of CF jumped almost 12% on heavy volume, closing at $202.30. Herbalife, another target of activist investors, surged after the bell on earnings that beat estimates on profits and revenues. The nutritional supplement maker also raised guidance for the full year. Herbalife shares gained more than 3.5% on heavy volume, closing at $60.57, and then popped higher on the earnings news. And solid quarterly profits and revenues from Express Scripts after the market closed today. Both numbers were better than analyst estimates, thanks to cost cutting. The company, the largest pharmacy benefit manager in the U.S., also upped its full-year guidance. Shares traded down 1% during the regular session, closing at $66.93.
Have you heard of Snapchat? Well, it seems lots of people have. It is a program that lets smartphone and computer users send messages, pictures, videos to other users, and seconds after they're viewed, they disappear. They're gone. Or so that's the claim. Snapchat has made its way from schoolyards and college campuses all the way now to Wall Street. But are those messages really gone for good? And is sending now you see it, now you don't messages a good thing, or can it be abused? Kayla Tausche has our report.
In a world where the web is a weapon and an email can indict, social media that self-destructs is a goldmine.
As soon as they're viewed, they're deleted from our servers.
Snapchat is a 10-second time bomb for pictures and messages.
It doesn't prevent someone from taking a screenshot or but from taking a photo with another camera, but they're gone from our servers for good.
CEO Evan Spiegel co-founded the company from a Stanford dorm room. Less than 2 years later, users send more than 200 million snaps a day. New York Magazine says Wall Street's been busy snapping, from pictures of lavish parties in the Hamptons to empty cubicles and thick deal pitch books. Whether embarrassing or excessive, it's only short-lived. Rich Hickman, a forensic data expert, says what's innocent could easily turn illicit.
I do believe that there is a very good possibility and a lot of potential for Wall Street traders to be using that for insider trading.
Unbeknownst to Wall Street's top cop Preet Bharara, when asked if Snapchat was being investigated.
I don't even know what you're talking about.
It won't be that way forever.
Law enforcement is always trying to take, the lead and always trying to stay a step ahead of the bad guys. But nobody should feel safe because they're using a particular method of communication.
Emails are now the heart of the most high-profile lawsuits in high finance, from Fabulous Fab, Goldman Sachs rogue trader, to hedge fund titan Steve Cohen, on the hook for his employees' insider trading, both defending content that has come back to haunt them. So is Snapchat the answer? Hickman warns even the most ephemeral technology has a loophole.
You think something is deleted, but once someone gets a hold of that phone and they want to recover that, whether it be for a legal purpose or for any type of nefarious use, you can do that within only a couple of hours.
Snapchat's biggest risk? Not a screen grab, but a subpoena. For Nightly Business Report, I'm Kayla Tausche.
Coming up on the program, are you at risk of hidden charges on your credit card? They're unwanted, but not illegal, and they may be costing you hundreds of dollars a year. But first, let's get a check on how commodities, treasuries, and currencies performed today. The merger between U.S. Airways and American Airlines could soon be cleared for takeoff. European regulators are set to give the okay to the $11 billion deal, creating the world's largest airline. Approval hinges on the combined carriers agreeing to surrender several aircraft slots at airports in London and Philadelphia to rival airlines.
From the skies to the roads, Ford is recalling 33,000 late-model C-Max hybrid cars to repair a component in the roof that did not meet federal requirements for protecting against head injuries. Thankfully, no accidents or injuries have been reported because of the problem.
Another big automaker unveiled a brand new line of all-electric and hybrid cars today, hoping they'll become the industry standards. BMW introduced its new i3 sedans. They're made of lightweight carbon fiber and getting as much as 100 miles on one charge. Some models will also have a tiny two-cylinder gas engine that can double the car's driving range. The i3 hits U.S. showrooms next spring and will start at $41,000 and go higher for the cars with that extra engine.
So how many times have you signed up for something because it was free, only to learn that you've been zapped with charges you never expected? It's happening to millions of us, and the cost is staggering. Our Sharon Epperson has more.
27-year-old Athena Karp noticed a strange charge on her credit card bill last summer.
I was frustrated and confused because I didn't know what it was.
Earlier in the year, she had registered for Wi-Fi service at the airport with a company called Boingo. During the next 6 months, she was hit with a recurring monthly charge of nearly $10. She didn't realize that was part of the deal.
I was shocked that I had, fallen a victim of a service where so many other people out there had really bad experiences.
Boingo says its subscription charges are explicitly stated in the sign-up and payment process. But these fees, known as gray charges, are unwanted and sometimes not obvious to consumers. Nearly half of these gray charges are for services that offer customers a free trial and that later convert to a paid subscription. Companies bank on people forgetting they signed up for those offers or missing the fine print.
These are not illegal. They're not fraudulent. That's why they're gray charges rather than black and white charges. They're sneaky. They're tedious.
Now, a new study finds they're really adding up. Consumers are paying more than $14 billion in gray charges each year. Broken down another way, 1 in every 3 credit or debit card holders in the U.S. pay an average of $215 a year. The most common gray charges were between $20 and $50 last year, often from gym memberships, magazine subscriptions, and mail order programs. But experts say consumers are most vulnerable online.
It's the online purchases where consumers are giving their card information over to merchants and retailers, accepting these kinds of free offers that trigger gray charges.
Karp unfortunately learned her lesson the hard way.
I have those moments now where I'm about to type in my credit card information now where I still have so much fear of, oh my God, is this going to be a recurring fee?
But says she now makes sure to read carefully before she clicks. For Nightly Business Report, I'm Sharon Epperson.
It's so easy to be duped. $7 here, $10 there, but you really do have to read the fine print.
And a lot of those things are those negative option things where if you don't check the box, your subscription rolls over and you continue to be charged. So you really do have to watch very closely.
Well, and finally, tonight, it's the biggest jewelry heist in years, and it sounds like it came right out of a Hollywood movie. A lone gunman was able to hold up as many as 3 security guards at the luxurious Carlton Intercontinental Hotel in Cannes, France, and make off with a staggering $136 million in diamonds and other jewelry from a diamond show being held at the hotel. And the entire heist, Tyler, took only about a minute.
$136 million worth of ice. Wow. We want to hear from you, folks. Let us know which stocks you'd like our Market Monitor guest to discuss this coming Friday. Log on to our website, nbr.com. Click on the link to submit your question along with where you're from, and we'll check some of the best ones and bring them to you Friday.
And that's Nightly Business Report for tonight. I'm Susie Guerra. Thanks so much for joining us.
And thanks from me as well. I'm Tyler Matheson. Have a great evening, everybody. We'll hope you'll join us here again tomorrow night.
Nightly Business Report has been brought to you by sailing through the heart of historic cities and landscapes on a river. You get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Guerra with a Nightly Business Report news brief. Some big mergers announced today. 2 of the world's largest advertising companies, Omnicom and Publicis, are merging, creating a $35 billion ad giant. U.S. drug maker Perrigo is buying Ireland's Elan for more than $8.5 billion. And the Canadian owner of the Lord & Taylor chain is buying Saks Fifth Avenue for $2.5 billion in cash. On Wall Street, stocks edge lower ahead of this week's 2-day policy meeting by the Federal Reserve. The Dow lost 36 points, the Nasdaq off by 14, the S&P down by 6 points. Pending home sales dipped slightly in June, but that's coming off a 6-year high in May. And the government will borrow $14 billion less than forecast this quarter after paybacks from bailed out Fannie Mae and Freddie Mac. Be sure to tune in to Nightly Business Report right here on your public television station.